Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, good afternoon, good evening, guys. How are we doing today? It is Saturday, the 10th of December. Hope you all are doing extremely well. Welcome to this Saturday's live session. I have a lot in store for you all today. I'm going to give it a couple minutes for everyone to hop on board here this morning. As always, just drop your location, drop any pairs you guys are looking at. Would love to see where you guys are from and what you guys are looking at this morning. So we do have quite a lot of pairs to go over. I'm going to go over about half of them, and then we'll take some questions and then finish off with the rest of them. All right. Good morning from South Africa. Hello, Diego. How's it going? Got my coffee. I am ready to go. Come on, guys. Let's get this chat going. This is our second to last Saturday live stream. We will have one more on Wednesday, and then we're going to finish off next Saturday at the 17th with our last live stream of the year. Probably won't be back for a month or so. I don't know. We'll have to see. So hopefully these live sessions are, you're utilizing them the best way possible. Obviously, everything talked in here is just strictly analysis. They are not signals whatsoever. If you are dependent on what we send out here, well, that is not really the good thing. It's not a good thing at all. It's just really to help you learn so that you can become self-sufficient. So one more Saturday live stream after this, and then we will be done for probably a couple months. All right. Let's see what we have going on. Kate Verde, Sven, good to have you on here. Orlando, good morning. Good morning. Florida, Wisconsin, Cameroon, Somalia, Nigeria, good to have you guys on today. Kenya. What's going on, Joe? Good to have you on today. How you feeling about AU? Yeah, that's a pair that I'm going to go over today. I had a setup on that this week. It's playing out quite well. Hey, Peter. What's going on? Good to see some familiar faces on here. It's also nice to see some new faces. Always nice to have new people on. Introduce them to the phenomenal world of smart money. I'm still coming off of a little bit of an illness, guys, so I apologize if my voice is a little crackly. I had that RSV virus this past week. It has not been fun. All right. GA and AN. All right. I'll be going over AN. GA, I don't know if that's on my list, so we'll have to see. GJ, UJ, I think that's on my list today. South Africa. Good to have you guys on. I haven't asked this question in a while. Anything that you guys would like us to start creating in terms of maybe potentially YouTube videos? Anything you want to see more of, learn more about? Would definitely appreciate any suggestions. We're always open to tailoring it to your needs. Manchester, good to have you on here. Mark, Nigeria. NZD CAD, AUD CAD. Yeah, NZD CAD, if you've seen really an AUD CAD over the past probably a good month, it has just been in a straight uptrend, very, very linear uptrend, and haven't seen much relief at all. So yeah, we'll take a look at ACAD. I don't think I have it NCAD on my list though. Yeah, like what about smart money concepts, guys? And obviously smart money, that's what we teach. What about it do you want to learn more of? Directional bias. Okay, that's good. You know, it's an idea for a market structure video. You know, market structure is 100%, you know, the key, you know, with the first step of, you know, finding a setup. We have to know where we're headed, where we're going before we can even look for a setup. Trade management. Yeah, that's a good one. I already kind of created a video on that on the Trading Nut YouTube channel. If you guys want to go check that out, I will try to find the link to it and drop it in the chat here just when we find it. One second, guys. We'll get started here in just a few minutes. I won't waste up too much of your time today, I promise. We have a lot in store for you guys today. I just want to find that video because I know that's definitely really, really important. Let's see. There it is. Sorry, I'm just finding it on YouTube. There it is. This video here will definitely help you guys. Goes over scaling in, trade management, you know, definitely very important. You know, trade management is really something that a lot of people simply don't know how to do. And it's not that difficult. You just have to keep up with the trades. You really just have to be able to set alerts at certain levels. And, you know, we'll kind of get into that today. We're going to be going over how we can best, you know, extrapolate the most amount of money possible from these markets here. You know, it is, you know, a very crucial aspect of trading because, you know, you could have the direction right, you could have the entry right, but still not make too much money because, you know, your trade management might be off. That's really important as well. If you have 30, 35 days for a prop firm challenge, you still go with 1%. Yes, 1% or less. You do not need more than that. No need to over leverage, guys. When do I stop trading in December? This upcoming week is my last week. So Friday is my last trading day. Then I will hold one more live session next Saturday, and then we'll be done. EJAU. Yeah, I think that's on my list today. Yeah, trade management, guy. I think a lot of you guys have that scale in, scale out. We talk about that. Stop loss, take profit placements. Talk about that in that video. Now, that's not really something that I wouldn't say don't actively go over. I do go over in my VIP. When I send my trade ideas, I'm not giving you guys stop loss and take profit. That's hand holding, and we don't do that. That creates dependency, and it's just not something we will ever do. So just like here, sometimes I have my risk to reward tools up. That's really just to help you guys. But in no means am I telling you where to physically put your stop and take profit. If that's what you're looking for, well, you can hop off this live session because I'm not going to be helping you there. I'm very straightforward with what I do. Euro USD, yeah, I think we'll go over that one. All right, guys, we'll go ahead and get started here. I'm going to share my screen and let's get right into it. I'm about to go over half of them. I think about 10 pairs to start, and then we'll go over it. So I think everyone can hear me and see me. Just drop a yes in the channel and we'll get going here. Let's see. First, start off by talking about US dollar. Okay. So with the US dollar, what we have to understand is, yes, we still are in a higher time frame uptrend. And I guess you can say that this is the high that has created, or this is the low that has created this high right here, right? So this is technically the range in which we're trading. So all of this is just one pullback potentially. However, we're getting into regions where, you know, we're retracing about, 90 95% of the way down. When we come into those regions, we really don't want to be fighting the current counter trend here. Obviously, yes, if you scale out higher time frame, the dollar is extremely bullish at the moment. That is true. But what is going on right now, especially the 4-hour time frame, not just the 4 hour specifically, meaning disregard the 3 hour and the 5 hour. That's not what I'm saying. I'm just saying this particular view, this scaled out view or scaled in view of what's going on is a high enough time frame to be like, okay, we're still making lower lows, lower highs. For this upcoming week, we probably should be expecting dollar weakness. Now, obviously, the dollar could go like this for the week and then continue like that. We would still be overall bearish. We just may see a potential dollar weakness or strength this week. I have no clue. Obviously the dollar is continuing to fall. So what we need to do is look for these long opportunities on XXX-USD. So AUD-USD, Euro-USD, GBP-USD, all those dollar-based pairs, we need to be looking for overall long opportunities. Now, not to say that the dollar can't strengthen, then at that time, well, that might be a good opportunity for these XXX-USD pairs to pull back into our levels. And if that's the case, then we can be looking to trade long on them. But overall, the dollar is weak. We need to be looking for longs on these dollar XXX-USD pairs. So that is that. It's all I really have to go over. I'm not going to be looking at specific levels on US dollar. The true, I guess, I don't even know the word for it. What's going to show you where price is going is the exact pair you're looking for. So if I'm trying to look at, Aussie dollar, and I'm trying to figure out where to buy this, I'm not going to go to the US dollar to try to figure out when I should buy AU, because dollar isn't going to tell me when to buy AU. What's going to tell me to buy AU is AU, right? That's what's going to tell me where to buy it. So I'll get into AU in a minute, but I want to talk about Aussie Japanese yen. So for quite some time now, we have been kind of trickling and kind of consolidating within our areas of interest. So as you guys know from a long time ago, we called out this level right in here. This overall demand level is where we wanted price to come into. So we created a low. Yes, we did break counter trend structure. That is true. However, we never came into this objective. So when price was starting to come back down, I said, you know what? We're going to run this low. This is going to be sell side liquidity. We're going to run that low and we're going to continue long. And that's exactly what happened. So we had that clear sell to buy and we went long off of that demand because we were making higher highs and higher lows. We wanted to continue with the overall uptrend of this entire market. And we haven't come into 100. Right? This is our overall higher time frame supply, higher time frame objective. So until we reach this level, we're still bullish, in my opinion. So we created that sell to buy. We made that overall higher high. So where do we need to look for overall pullbacks? Well, this is the entire range. This is the low, the new low that made this new high. So when we start to pull back, we need to be looking within this range to find buy opportunities. Okay. So it happened to be 91.5 right in here, just imbalance. And then all the way at the bottom, we can see that 4-hour imbalance right in here, right? It's completely filled that imbalance over to the right. We came into that very nicely. But our original entry was 91.5. We had a nice sell to buy off that level, and we broke counter trend structure. So we are looking for continued longs here. You can see the counter trend. This is a low. This is a high. This is a low. And then we made a higher high. So now, since we've broken the counter trend structure and have reacted off of our objective level, we now shouldn't probably come below this low anymore. Originally, we could have come down all the way to this prior low and still maintain bullish structure. But now that we've broken this counter trend, we don't want to come below this low now. That's the new low of interest. Okay, so where can we be looking for buys? Well, I scaled into this huge sell to buy. I couldn't really find much except for imbalance. So I just kind of took it off of the psychological levels. Sorry, that's the word I'm looking for. Psych levels 92.00 and then 91.7. Now, if you guys know how we trade, obviously we're looking for high risk reward trades. However, when you have stuff like this and you can't scale into it very much, meaning like, let's just go to a lower time frame here. And there's really nothing to scale into. It's just straight imbalance, lower time frame. I just find the obviously in discounted price, what we're looking for, where do we sweep liquidity? Right in here. Well, 92, that's a nice like level. It's within the imbalance. And then, 91.7 is the nearest round figure right before this imbalance was completely filled right there with that wick, right? So in that case, you just have to put stops below the low. There's no point in trying to be fancy with it. There's no point in trying to find a 20 pip, 30 pip stop loss. In this case, our stop on these two trades, if I just scroll out, are 116 pips and 86 pips. Now, a lot of you are thinking, oh, that's ridiculous. That's way too high. You guys have to think about it in terms of a risk to reward standpoint. I can't stress this enough, especially when you are just seeing an overall level, right? And you don't know where exactly within this entire demand zone or order block, if you want to call it that, price is going to come into. Place your orders at these levels and have larger stop losses. That's fine, because you don't have to deal with the market going like this and constantly like chopping around and having that psychological stress of, oh my gosh, I have a 15 pip stop loss. I have to be perfect or I'm going to lose this trade. So, many people who, got in right here, even right here, and put their stop like, I don't know, below here, you would have gotten stopped out easily. And now market's making its move, and now FOMO sets in for you, and now you're getting in up here instead of down in here. So that is why I don't really like the lower time frames to begin with, is because it creates way too much psychological stress. I don't need the stress. I just need to get in at these general levels, have a high enough risk to reward for my trade. And if so, I can place the trade and let it go. And we can see clearly when we first got into it, it was right in here, that candle. And to now it's been 7 days, 20 hours. So and actually from next week, 10 days when we start up. So that's 2 trading weeks of hardly much profit at all. But we can see that, lower time frame traders in here trying to pick the exact bottom of the market, trying to scale into like the 1 minute time frame in here is just going to end up hurting them. That is why you can't just go from the higher time frames right down to the 1 minute time frame and expect to find a valid order block or area of interest. Sometimes there's not any. Sometimes it's just a general level that should probably react based upon market structure. So you go based off of that. And then when price makes its move, then you can scale in and look to find an opportunity. So for instance, based upon this entry, the valid take profit for me is a new higher high at the higher time frame supply at 100. I'm not just extending this risk to reward to fit my risk to reward goals. That's not what I'm looking for. I have to place my take profits at appropriate levels anyways. If they're not at appropriate levels, then I have to look at the risk to reward. If the risk to reward is a 1 to 2, then obviously I don't place it. But if I'm trying to get like a 1 to 7 out of this, and this is like this take profit's way out of where it should be, then the chances of it actually hitting overall take profit is extremely low. You have to be placing your take profits at appropriate levels to begin with. And we can see even with 116 pip stop loss on this trade, this is still a 1 to 6.9. I don't know about you guys, but a 1 to 7 is a pretty good risk to reward for me. This is a 1 to 9.65, almost a 1 to 10. Obviously, these are at half risk apiece, right? Because we have 2 entries, half risk and half risk. So 9.65, I'm just going to do the math very quickly. 9.65 plus 6.9 divided by 2. The average risk to reward for this is 1 to 8.2. So if I win both of these trades, I win 8.2%. That's phenomenal return. So people who are, going gung-ho about 116 pip stop loss, well, it's all about the risk to reward. So at least we're in the trade. We don't have to worry about it. Now we can scale into lower time frames and potentially look for lower time frame opportunities. So now we're starting to trickle up. So we can see here clearly we ran liquidity, this low and these lows in here, and produced a higher high. So with this area of demand, this was created because of news last week. We may have the opportunity to push into that level and continue higher. The Aussie is quite strong right now. Overall, XXX yen is bullish. So we need to be looking for overall longs. We've come into pretty much our last point of return. We don't want to come below this low anymore. We've come into our demand level. So the only thing for this pair to do is go long, right? Obviously, yeah, sure, we could potentially lose this trade and it could go short, but what's the probability of that occurring? We're in an uptrend. So what does that entail? If we're in an uptrend, what is the probability? Is there a higher probability that we go long or short in an uptrend? I'm not going to answer that question. You guys should already know that. So there's your answer. So looking for opportunities off of lower time frame opportunities. You don't need to scale in to lower time frames every single time to try to find your perfect 1 to 20 risk to reward. Because you know what that does is in order to be able to consistently hit 1 to 20s, it's pretty much impossible to do. You can't consistently, like 70, 80% of the time, hit 1 to 20s. You just can't. So that requires more losses in order to finally hit a large risk to reward. But what that does for a trader is when you acquire more losses, that affects your psychology. Then you start revenge trading because you're seeing a stream of like 3 or 4 losses or 5 losses before you hit the big trade. When in all reality, if you just took it based upon numbers, you would be overall profitable in the very end. But everyone and their mother wants to make $1 million overnight. Everyone wants to have a 100% win rate. Everyone doesn't want to lose a trade. So that's the problem. That's why I don't really care about the lower time frames. I look at my higher time frame levels. I place my trades. Fine. I'm stuck in this for 2 weeks. Great. Now I'm making money when it finally breaks. If it does, great. Perfect. I'm making money. And I can then scale into lower time frames and potentially find lower time frame opportunities for even a higher and better risk to rewards. That's just what I'm looking for. I'm a long-term trader. I'm not a short-term trader looking to get rich quick. It's just not who we are. It's a long-term game. So that is that. Aussie dollar, same sort of deal, looking for overall continuations. Now, this is not the best risk to reward in the world. This is only a 1 to 2.75. If you took this trade, well, congrats, you are in profit at the moment. But, not the best risk to reward out there. Higher time frame on the daily. We can actually go to the 4-hour. We're coming up into a level of supply. This does not mean that price is just going to come into this level and reverse and go short. That's not what I'm saying. We may have a reaction, sure, but this is an area of supply in the market followed by a huge imbalance move. So where should we be taking profit on counter trend buys? Probably those levels, right? Just in case we do have a reaction and maybe price ends up not reversing, but having an overall pullback before maybe continuing long. So we want to get out of the market at these probable regions. And that's exactly what I teach in that trade management video that I just sent in the chat about how we can best go about placing our multiple take profits, if there are any, right? Sometimes we just have 1 take profit. Sometimes we have 2. Sometimes we have 3. In this case, we only have 1. There's only 1. I don't see a need to take partials anywhere. I mean, you could, I guess, at this high, but this is so close to the overall take profit, you might as well just have 1. There's really nothing. I mean, maybe you can consider this an area of supply that you could react from to go short. So maybe that could be 1 take profit, but in this case, let's just call it 2 then. 1 and then 2, right? So we need to be splitting up our risk accordance with that, to have multiple positions, to have different take profits, right? You set your take profits at levels that have a decent probability of reversing. Obviously, I don't expect price to come into here and just reverse. We're in an uptrend. We're expecting a higher high. But if price is going to go against my trade, shouldn't I be prepared for it? So how can I best prepare for any situation that could go against my trade? Well, that's an area of supply in here. We could possibly come into that and maybe reverse. And if that's the case, if we do that, then at least I'm protected, So anyways, we were making higher highs, higher lows, higher high, higher low. Okay. We swept relatively equal highs, sell to buy. The counter trend was showing lower low, lower high, lower low, lower high, lower low. I guess you can call that a higher high. Really, this is the structure we needed to break. But anyways, we failed to generate a lower low here and made the higher high, right? So we wanted just to pull back into that level of demand to go long. And what we can also see is we're not looking to scale into down to the 1 minute time frame to try to find the perfect 1 minute candle. That's a valid level. I don't really see anything else. That was mitigated. This was mitigated. There's imbalance right in there. But, you don't have to be too fancy with it. You really don't. because we got in at our perfect level. We got our wick entry. We got in at the overall demand level. Great. Now we're making money. But when, some of you traders are trying to be too perfect with it and are trying to complicate it too much and trying to find the perfect candle to play off of, well, now you're missing out on this whole trade. And now instead of getting in, right in here where you could have, you tried to get in here, but now you're getting in up here because you see that price isn't reversing and we're just going and going and going. It's FOMO. We don't do FOMO. Okay. So what I recommend is getting in off the higher time frame levels. Do one of two things. Getting in off the overall blocks. Okay, boom. Now you're in the trade. If price just continues to trickle and never pull back and whatever, great. You made money. Cool. What you could also do is, place maybe half risk here and then maybe half risk at whatever level you're looking at, like right there, just in case we do come lower. And that way you have a better risk to reward. Also, what you could do is place your level half risk, like right there at the level we did, and then look for opportunities to re-enter. Don't force anything. Just because, you've reacted from a level doesn't mean there's a possible re-entry opportunity. I'm looking at this level in here, right? That's a possible area of demand. We can see the huge sell to buy reprice continue. That is definitely an opportunity, but there may not be opportunities all the time. We can't just force additional entries to try to get the rest of our risk in here if we only risk 0.5%. We need to be thinking about this like professionals, not like amateur peasants, to be quite honest, right? We can't think about it like that. So in this case, I really don't know if this opportunity is valid right now, just because we're already kind of into this region anyways. By the time market opens, price could come into here and then go long, maybe, if that's the case. Well, I don't trade Sundays, so I'm going to sit on my hands until at least Monday morning. I don't even look at the charts until Monday New York session anyways. So I would recommend you guys to do the same. Don't even look at the charts until Monday London New York session, because there's no point in trying to trade outside the time frame of Sunday. Don't trade Sundays. That's just what I recommend. So we're looking at pushing up higher into 6863. Not the best risk to reward, but still good. Okay, continuing here, Chef JPY. Excuse me, guys. So with Chef JPY, we took one loss on this on a 0.5% risk, and I'll show you what we're looking for. So overall, we are currently bearish on this time frame, right? Don't look at this. Don't look at the fact that it's the 1 hour. Okay, 4 hour time frame, it's still bearish. 15-minute time frame, it's still bearish. Okay, don't worry about the time frames. Look at what's going on in here. Right in here, we're bearish. Okay, lower low, lower high, lower low. All right, lower high, we want to look for a lower low again. So following lower time frame trend, we can see we have an area of supply mitigated, area of supply mitigated, supply mitigated. Now we had multiple levels. We had this level of supply in here, which we originally came into, stops above the overall high. We're still in this trade. We have another level right in here, this last up close that came into this lower time frame supply. So we're currently in this one in a little bit of profit right now. We also had, once we had the reaction off of this level of supply on the lower time frame, we kind of consolidated, dropped, failed to make a higher high, lower low. So I thought, okay, well, we may come into this level and then roll over if we're just going to continue with the lower time frame trend here, right? And then make an overall lower low. Well, obviously that wasn't the case. We ended up pushing right back to the upside. So we lost 0.5% on that trade, just being transparent with you all. But we're still looking for overall shorts. However, if we look at the daily time frame, where are we? What are we in? We're in an overall uptrend, right? We're making higher highs, higher lows, high, low, high, low. Okay. So we can see here, where is our last point of demand within the previous swing point? Well, this is the high that created this low, and this is the low that created this high. This is the range, right? So we need to be pulling back into somewhere in that range. Well, we can see here that before we created this huge imbalance move, this was our last selling volume. This was that last area of demand. We also didn't come into that with that wick. We finally pushed down into it, swept sell side liquidity, and then mitigated this demand. And we see we had a huge reaction from it. Very strong push into it, very strong reaction out of it. So I wouldn't be surprised if we went long here. That's fine. If we go long, then we look for buy opportunities. So really, if we close above this level here, I'm probably going to be shifting my bias. I would need to see a sustained closure. If we can get that, then maybe overall pullbacks into this last selling volume that failed to make the lower low here within this counter trend. Maybe that's an opportunity for demand to go long. That would be that possibility for me if we ended up breaking. Then I'd be looking for overall longs. We are looking for longs on XXX Chef or JPY across the board. However, this current trade is still technically bearish. So I will be, still selling here. If we get the reaction and we go short, great. If we don't and we go higher, cool, whatever. Bias is shifted, structure is, bullish, and we can be looking for buying opportunities. Okay. So we can get rid of this now since we already talked about it. Just wanted to save that for you guys so you didn't think I was lying or whatever. I did take that trade, did lose 0.5%. Oh, well, I'm a human. Happens. We're still looking for overall shorts there. Euro AUD. So we talked about this last week. We're kind of hedging our positions with Euro NZD, right? We're in tons of Euro NZD shorts, but we understand Euro AUD is showing us bullish structure. So higher time frame, we can see here we're sort of in this pullback phase, right? We're overall bearish at the moment. You can see that lower low, lower high, lower low. We're just forming a lower high right now. So where could we pull back into before going short overall? Well, if we take a look at this, we can see this is the last buying volume before this huge expansion to the downside, before the leg to the downside, right? We swept this previous high. It creates that huge buy to sell. This is that last buying volume in here, 1.5800 psychological level. So I really want price to get back up into that level. We haven't hit that yet, so I want to continue to see higher prices. So you can see we made this high. We came down, made a low. We swept sell side liquidity, sell to buy, and then we made a higher high. So high, low, higher high until at least this supply level up in there. So scaling into a lower time frame. Actually, going back out to the daily, where do we stop in here before making a higher high again? There's this area of demand, that doji candle here. You can see we had that sell, we bought, we sold, bought, chop, 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 creates that doji expansion. So we're just trickling back into that level to go long again. So it's better seen on the lower time frames. Let's go to the 4-hour. We can see the accumulation that's occurring, very slow and steady pullbacks for a more expansionary move. Right, we came into that level once, expanded, came right back down into it, expanded again, came back down, failed to make a lower low, and we made a higher high. Okay, so all of these are lower lows, lower low, higher low, higher high. So now I'm looking for expansions to the upside, pullbacks and continuations into 1.58. So where is the, I'm trying to think of the word, the range. Sorry, that's it. The range is this low to this high. Okay, we've broken structure. So we can be trading technically all the way back down into here and still maintain our bullish structure, right? So let's scale in again, 1 hour time frame. And also at the same time, we cleared equal lows. 1, 2, 3 touches, sell to buy, higher high. Also had this small head and shoulders formation, enticing sellers. Stops were above the high for probably sellers who broke the neckline here, and then price went long, took their stop losses. So where can we be looking to buy? Well, I have just this intermediate level of demand in here. If we just come into that and then go long, great. Awesome. We can also see head and shoulder, skewed head and shoulders here, shoulder, head, shoulder, could fake out of that and then go long and rally. So I still am looking for longs on Euro AUD. If we come lower, fine. We lose on this setup, half risk here, stops below here, half risk here, stops below there, right? So half risk on each. If we come lower, then we have imbalance on the lower time frame. Right, this is kind of our last, our last lower time frame demand before the expansion. We can see that imbalance there, just straight buying volume. Also happens to line up perfectly with where we swept liquidity. Swept liquidity here, and then we made the move. So that will definitely align, if I just extend this over, into that exact level. So that's a good confluence for us to have as well. So this is our higher time frame, lower time frame levels, looking for overall longs. Euro NZD, on the other hand, is we're kind of hedging our shorts our longs on Euro AUD with shorts on Euro NZD. Because higher time frame, yes, we are still bullish overall. I want price to come up into our higher time frame level of supply in here. I really want price to dig deeper. However, we are massively bearish right in here, this counter trend. We're still bearish until, in my opinion, we hit at least 1.63. That's the nearest psychological level. You can also see I have another line in here that starts with this last selling volume that failed to make a lower low. I mean, let's just think about it, guys, right? Counter trend, low, high, low, high, low, high. We failed to make a lower low, higher high. That's the demand overall. So 1.63 is very close. It's right there. That's just the psych level. We also have, what is this? 1.6274, which is the start of the demand. And we also have another level at 1.6135, which is the imbalance in here and really the last selling volume on a lower time frame before the expansion really started. So I want price to dig deeper. Even if we are to go long, we still are maintaining higher highs, higher lows, higher high, higher low. But until then, I think we need to continue lower and deeper into discount before potentially rising. So 4 hour time frame, we've already hit take profit on these trades in here. So it's a great 1 to 5.25, a great 1 to 6. So congrats on you guys for catching that if you did. Next, we have some opportunities to potentially sell. I don't even think I'm going to talk about these two regions. You can write down the price if you want. I just don't think that this week we're going to come up into that level. I think we're just going to continue short into 1.63 anyways. However, I will talk about this region right in here. You can see the lower low, the lower high, the lower low. If we have an overall pullback back up, I think that 1.6735 may be an opportunity. Now, this was that last buying volume that failed to make a higher high and instead made that lower low, and that's restarted this expansion. So we could pop up into that region, maybe a little bit higher into these two. We failed to come into them here. You can see that huge buy to sell that swept liquidity, lower time frame supply. So that's an opportunity. But for the here and now, though, we saw that last week. We talked about this as well. For those of you who were on live session last week, or actually it was last Wednesday because we weren't on last Saturday. But anyways, last buy to sell in here. So supply on a lower time frame. We also had that supply in here. So 2 levels essentially, well 3, because we had the overall buy to sell. We also had the 1 hour time frame imbalance that we came into. So we're sitting pretty on both of these right now. This is a 1 to 5. This is a 1 to 2.5. So you can see 5.2 plus 2.5 is what? 7.7. So divide that by 2. That's like what? 3.8. 3 point something. That would be the average risk to reward for all of them. So still would meet my risk to reward rules. We got in and now we're just tanking, right? We're just falling. So there's really no re-entry in my opinion. I think we're just going to continue to fall here on your NZD. So continued shorts are expected, at least into 1.63 in my opinion. So yeah, that would be, hedging our shorts here with our longs on Euro AUD. That's what we're looking to do. Euro GBP. So I have an opportunity here on Euro GBP for re-entry. We'll just see if it actually pulls back. So higher time frame, you can see that we are still within this higher time frame pullback phase. We are bearish here. Okay. Higher time frame though, on the daily, we are bullish, right? Higher high, higher low, higher high. Not to say that we can't come lower into 0.81. That's a possibility for me. However, just to maintain structure, we're still bullish. And if we are to go long, I think we need to go long from this demand level. Just like I talked about on the other pair, low, high, low, high, low, high, failed to make a lower low, higher high. That's the demand. Flip from supply to demand. Okay. So where's that 0.85 psychological level? I think we need to reach that before potentially going long if we are to go long. I just think we need to push down into that level. So we had multiple sell opportunities. We had one from a 1 hour time frame level of supply in here. We can see we swept a lot of liquidity, huge buy to sell. There was a repricing in here, lower time frame. We came back up, swept buy side liquidity into 0.881. I am still holding this position. This is for a 1 to 5, almost a 1 to 5.5. And just continuing with the lower time frame opportunities. So we can see in here that this is somewhat of a distribution schematic. Okay, this is the distribution, and then this is really where we started to see the expansion from that distribution in here. So with that being said, I would treat this as one leg, one pullback. One leg, if we get a pullback, where can we pull back into higher time frame before potentially going short? So if we break all these lower time frame highs, right, doesn't mean we're bullish. We need to be looking for pullbacks to long it. It just means that we're probably having a deeper pullback for a continued short into our objective point. We haven't hit the objective, so we need to come into that region. Okay, so where can we do that? Well, since this was the distribution here, this was really our last buying volume before the expansion really started to kick in, and then we saw, the lower lows, lower highs, right? So that would be our last point of supply, 0.871. So if we get an overall pullback, I am looking to short at that level, 0.871. Stops would probably have to go, probably above this high, because if I put it above this high, it wouldn't be a good risk to reward. So I probably have to just put it above there, which is fine anyways. But anyways, lower time frame. We're still in this trade here. This is a lower time frame supply level. Okay, got a great trade. That was the risk to reward for it, 1 to 4.75. And then another opportunity. We came up into that level, counter trend, high, low, failed to make a higher high, lower low. It's just simple demand to supply flip. Supply in here, had a little bit of drawdown, took a little bit longer, right? So I don't really give a flying rat's ass, to be quite honest with you, about all the little tiny 2 1-minute areas of supply in here. I don't care, because I'm getting in at the overall level. Price is going to consolidate. When price does crap like this, it's just going to squeeze out all the other retail traders who have so much psychology that they can't control, and then they finally make its move. Right, because when you're trying to trade all in here, these lower time frame, supply levels, all the imbalance fills, it's just going to screw with your mind. So just get it off the overall block and be patient. We're finally starting to see the move, and this is still a 1 to 3. Meets my overall rules. Okay, so I drew this trend line to show that retail is behind this push or this retracement. 1, 2, 3, 4, 5 touches. Yeah, there's sell-side liquidity resting below here. Yeah, I knew we were going to fall. It's just blatantly obvious. So pulling back into a level of supply is what we're looking to do. Let's scale in and see where we actually broke. Now, this is not a break and retest sort of deal here. It may look like it, but in terms of supply and demand, it is not. So retail in this case, if they see this as a breakout and a retracement for shorts, they may actually win that trade, because sometimes retail traders do end up trading in the direction of order flow. That's why retail wins on occasion, right? But the way that they trade doesn't make any sense, right? So we can see we swept liquidity here, that wick. Okay, this was the overall move that failed to make that higher high in the market, right? We made that lower low. Okay. But in here on a lower time frame, you can see we swept relatively equal highs there with this buy to sell, failed to make the higher high, lower low. So I'm looking more at this area of demand or supply right in here. So 86128 is my level. If we get that overall pullback back up into that level, I will be looking for continued shorts into our overall level at 0.85. All right, so just looking for retracements. We are in many positions at the moment. We're in higher time frame here. We're in this one from here, and we're in this one from here. So 3 great trades in really good profit. Euro USD. So with Euro USD, this is probably going to be the biggest learning lesson for you guys today. I'm going to go a little bit deeper into Euro USD. So how many pairs? 1, 2, 3, 4, 5, 6, 7, 8. I don't think these will take me too long. So I'm going to go over EU in good detail, and then we're going to take some questions, and I'll go over the rest. Okay. So with Euro USD, and this is just where, guys, please, please, please don't try to complicate trading. It doesn't have to be difficult. The reason why a lot of you fail is because you just complicate it too much. It doesn't need to be complicated. So look at the higher time frame first. Okay, where are we going? Where is this current uptrend? Are we in an uptrend or downtrend? Well, I just gave that answer. We're in an uptrend, right? We're continuing to buy, right? Dollar is weak across the board. We need to continue to look for buys on XXX USD. Yes, we are in an overall downtrend. I'm not taking that away from it. However, when we've broken structure, this entire downtrend, once we have broken structure, we're starting to make higher highs, higher lows. I don't really care about all this stuff in here anymore. Now, if there was a clear area of supply, right? If we were clearly in an overall downtrend, then of course I would be looking at placing, my orders, my potential sell orders. I would look at the nearest supply level. And if we're coming up into it, I would, look for shorts, right? But obviously this is just low resistance. This is just low resistance liquidity. It's just trickle. Yeah, every single level in here has its own supply. Sure, every single level does. But this is all just intra-trend. So who knows if we're going to react off of this one here, this one here, this one here, this one here. I mean, who knows, right? I'm not going to try to guess. Don't complicate it. So where do we need to be taking profit? Well, we can be taking profit at these levels, or at least partials at least, at levels in which price could potentially reverse. Maybe we have this overall buying volume in here, maybe a lower time frame last buying volume before the short off, right? So those are potentially valid levels. Higher time frame, I have 1.07. Just deeper up into here. If you wanted to hold higher time frame, I mean, you can really just set a runner, to be quite honest. I mean, if we go to the higher time frame on the weekly, we can see that we swept all this liquidity. And now this is such a strong move to the upside. We came into this level here. The reason why I have that level is because we came into our last selling volume. This is the low that failed. Well, this is the selling volume that failed to generate a lower low from this low. And then we started the expansion. So if I just zoom back out, what does that trend look like to you? Higher high, higher low, higher high, higher low. We've come into a level of demand. We've filled some imbalance in here, right? Some just straight buying volume. We've come into that level. So now that we're starting to push away from it very strongly, and we're breaking counter trend to the down, breaking the down counter trend, this counter trend, right? Who knows? We could easily go like that. We could easily make a higher high. However, we do need to be smart with our take profits, because who knows? Maybe we will have an overall pullback for another higher high. So we still need to be taking profit at reasonable levels before going, because we don't want to just be setting our take profits way up here, because yeah, price could go like that. Great. Then have an overall pullback. Then guess what? You get stopped out, and then price goes like that. Have reasonable take profits. So you're securing yourself. I think I have, 1.0950. Okay, let's take a look at that. 0950. What the heck is that? 095. Yeah, I guess you could say that's like within this supply level. I mean, who knows? Just higher time frame levels I have. So anyways, we're making higher highs, higher lows. Higher highs, higher lows. I talked about two levels. I talked about one right in here. That was a level of demand. We can see that we came into that level very nicely and made a higher high. So I took partials, moved stop to break even, came right back down, hit me break even. We had a secondary level in here. We came down to the exact T. Oops. And now we're still floating in this position. This is for a 1 to 6. So we're still holding that. We can clearly see that we formed like a retail head and shoulders, sort of enticing people to sell right below the breakout. And then guess what? Right back to the upside. Don't fight the trend. When you see stuff like this happening, like, oh, you see a trend line, oh, it's breaking, oh, it's going to go short. It's probably going to go long because you're thinking it's going to go short. It's just how the markets work. So anyways, higher high, higher low. What are we doing here again? Love the head and shoulders fake out. Retail, they can just, never mind. Sell to buy. Retail sells below the neckline here. Huge institutional sell to buy. What time did that occur as well? 10 a.m. Eastern Standard Time. That's sort of the end of London session, middle of New York, last point of New York manipulation before the continuation for the rest of the day. So huge sell to buy into that level, and then we make a higher high. we started off with the huge sell to buy. So that's one opportunity, 1.0388. We have imbalance here on a lower time frame, 1.0350. And then we have our lower time frame demand, and that's 1.0333. So that's why we have those three levels down in here in case we have an overall pullback. So if this is a higher high and this is a higher low, if this is a higher high, what could we expect to happen? A higher low, right? So we could have an overall pullback. And many people would probably think, oh, well, we're making higher highs, higher lows. Oh, if we break and come below here and we close below it, oh, we're bearish. We need to pull back and go short. No, because we are overall bullish. Why would we be looking for shorts? This is the lower time frame structure right in here. Sure, we can continue to play off the lower time frame structure until it breaks. But when it does break, you have to look at the higher time frame structure. Where could we pull into higher time frame? And that's these levels down in here. So that's what I'm looking for if we get the overall break, but I'm going to continue to trade the lower time frames if there are setups in the first place, obviously, to continue to buy it, right? Because price could just continue to react off these lower time frame levels and just keep trickling and trickling long. That way we can still be taking advantage of it. Yes, we will end up losing eventually when price maybe has a pullback. Let's say we have a pullback now. Well, then we lose. But fine, then we have really high probable chance of winning these trades. And then we go long, and then the aggregate positions would still be in profit. These longs would take care of any losses in here, or those wins. Obviously, we have to do a good job of breaking up our risk. So at the current time, I only had, when price was up in here, I only had this opportunity here, and then these three. So I had to split it up, 0.25%, quarter, because if we just had a straight up meltdown, then we would only lose 1% because it's just in one swift motion, right? That's just one trade. However, now we have different opportunities in here. So I still have to be careful. So I had 4, now I'm up to 6. So what I have here going on now is 0.25% and 0.25% here. I'll talk about all these. So total was 1.5. Now what we have to do is we have to kind of step back and be like, okay, we're in 1.5% total risk potential, right? That's if price comes all the way back down, okay? If we lose this trade, we're losing 1.5. If we find other opportunities, we need to be careful because now we're getting into a point where we could be overexposing ourselves to one pair in one direction. So at that point, if let's just say, for instance, I don't know, price goes like this and we have another buy opportunity from a sponsor candle. Well, then I would be looking at other opportunities in here that we were playing off of earlier to say, okay, can I go break even on these? As to if we end up, going like that, then I'm breaking even on a couple pairs or a couple entries so that I can mitigate some risk across the board. So I'm not in like 8 or 9 different buy opportunities where I can lose them all. It's just being smart and figuring out the best way to possibly mitigate some risk as you go. So all of these are just lower time frame opportunities. This is our higher time frame region. If we have a higher time frame retracement, we're going to be looking for continuations long. Because again, what are we more highly probable to continue with the bullish trend, or are we more highly probable to go short? Well, if we're bullish, we're more highly probable to go long. So it's okay to be taking risk at these levels. All right, so let's scale down into the 15-minute time frame. Let's take a look at what we're looking for. So in here, this is a clear sell to buy, failure to make a lower low, higher high, right? Higher high, higher low. We mitigated that area of demand, and we did the same exact thing. Huge sell to buy, reprice, continue. Creates that demand in there. Sweeping all the sell side liquidity in here. Everyone who was trading short lower time frame or trading long lower time frame was swept. That's why pullbacks occur, to not only free up liquidity but for the banks to get in at better prices. So anyways, we get in here, area of demand, had a little bit of drawdown. That's okay. Stops were below this overall low. I have a question about people are like, oh, well, if the box is drawn here, does my entry go here, my stop go here? No. Okay. Just because I have this box drawn doesn't mean that's where your parameters are. Entry can be here. That's the start of the overall demand, but it doesn't mean that the stop loss can go here. You have to just understand what's going on. So This is just the overall block I'm looking to look for longs in, right? Stop loss has to go below this low because this is the low that generated this new high. This is the entire range of this expansion. So people placing their stops below here, well, sayonara to you, you got stopped out. Now me, I'm good because I placed it below here at the appropriate level. I'm just being honest with you guys, right? I'm not trying to sound like an ass. I'm being real. That's the only way I can get through to people, is being kind of hard on you all. That's how I can get you guys to learn, right? So we need to learn through our mistakes. People oftentimes will just place their stops here. We need to be placing our stops not only at appropriate positions, but where does market structure stand? All in here is just one particular trend. Sure, we may come take out that low. We may come take out this low, but we shouldn't take out this low. And if we do, since we're overall bullish, it would just be an overall pullback, obviously. Let's just say that we were overall, let me try to think. Let's say we're overall bearish. If we come take out that low, then yeah, we would have made a lower low. Then we can be pulling back to look for shorts, obviously. But this is where the trend started. This is the low that generated that high. This is the range. So stops need to go below the range low right there. So lower time frame, we accumulate in price. Very just strange accumulation. Created this level of demand, pushed up, came back down, mitigated that level, and then pushed up again. This pullback never mitigated this demand level here. We have a little bit of an imbalance in there, as you can see, just straight buying volume. So we never came back down. So I'm thinking if price has an overall pullback, we may come back down into our lower time frame demand levels, sweeping sell side liquidity, coming down into that level where we accumulated and going long again. If I go up to a higher time frame, you can see that this could be an overall pullback. This could possibly be an expansion, overall pullback, expansion, pullback, stuff like that. So just because price may come down and come into that level of interest and sweep the prior low doesn't mean it's now bearish again, right? This is just lower time frame trend, sure, which is why we're playing off of this level of demand in here for sure. But this could just be one expansion for an overall pullback, for one expansion for an overall pullback for expansion, right? Whereas then this would be boom, 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 like, right? It's all fractal at the end of the day, okay? So it's okay to be placing multiple positions. You don't need to try to catch the exact level in the market every single time, right? You don't need to be so precise and like, oh, okay, which one is going to work out? Take multiple different positions. Just split up your risk. And if you have like 3 positions or 3 potential entries, and if you're risking 1%, take each of them at 30.33% risk, 1/3% risk apiece. That way, if you lose all 3 of them, you're not losing 3%, you're losing only 1. So in a little bit of profit here at the moment on this trade, stops are going to be below that low. Secondary entry here, if we just break, then we have other ones higher time frame to go long from. Continuation is long, that's the bias. Dollar is still weak. We need to be looking for buys on XXXUSD. All right. Partials need to be placed at, like I said, levels in which price could potentially reverse from you. That is why I'm not going to hold, if you're in my VIP, I'm not going to hold your hand. I'm not going to tell you where to take profit. I'm not going to tell you where to put your stop loss. That's something that you guys need to learn. If I keep telling you this stuff, then you're just going to become dependent. You're going to end up just relying on me to provide you with quote unquote signals, which we just quite frankly despise to the greatest. So we'll give you areas of interest, of course, and you can be taking advantage of these all day long. And I mean, if you just use some common sense, you can easily be making money from these areas of interest. It just comes down to you deducing where to put your stops and take profits, right? That's just something that you need to learn on your own. I can guide you and tell you, hey, be looking to take partials at regions price could potentially reverse from, our nearest supply level, for instance, looking for higher time frame areas of supply to the upside, 1.07, 1.0950. But I can't tell you that every single time, because at some point, if I do and you're seeing tremendous success, you're not going to want me to stop, and you're not going to want to really learn. And then you're just going to become dependent. That's why I don't do it. All right, guys, so I'm going to answer some questions, and then we will continue with the rest of the live. All right. Let's see what we have here. Have a lot more to go over. Have a lot of other great setups for you. I think I have like what? Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like 12 pairs. It's not going to take nearly as long as the first 8, but I do have a lot of good setups. If you have your money management parameters set before you enter your trade, all you have to do is stay out of the way. Psychology solved. Exactly. Prepare the trade before you place it. If you're looking at entering a certain position, figure out how am I going to manage this trade? In certain situations, the price does this, 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 or this. How am I going to react off of what price is telling me? Prepare for your trade. You can't just get into the trade and figure it out later. That's not professional. I'm teaching you guys how professionals go about managing positions, how they go about trading. I'm not trying to sit here and boast or anything like that. I'm trying to give you guys the best, piece of advice that my mentor gave me. He was a hard ass on me, which is why I tend to come across as a hard ass to people, which quite frankly, I think is the only way to help you guys learn. Nothing personal. I feel like that's just why I am where I am today. It's because of that. And it sucked when I was going through it, but now I can turn around and thank him for it. Let's see. What about macroeconomic situation of the EU zone, though? I think the USD is still stronger than the euro. My honest opinion of that is, I'm not really a position trader. I mean, I'm not like getting in off of like daily, weekly, monthly zones and holding for months on end. If that was the case, then yeah, I'd probably want to stay up to date on these higher, fundamental news events, macroeconomic data and all that stuff. It's good to understand. It really is. It can't hurt at all. However, I'm more of like the intraday, intra-week type of trader. So I don't really care about all the news. And macroeconomics, great. I do pay attention to some of them. Like I'll look at, what's going on with China and how the supply chain is affecting. Sorry, guys, I'm still sick. How supply chain is affecting things. But at the end of the day, I'm looking for price action to tell me what to do. And I'm not looking to hold for weeks and months on end. I'm trying to get in and out very quick, get my 1 to 5, maybe my 1 to 10 if I'm lucky, and then get out. So those major news events aren't going to really matter. And if they shift the structure of the market for its higher time frame movement within macroeconomic data to go in alignment with that, then great. I can just continue to trade with that trend then. So it's a good question. I don't really care too much about it. Please analyze gold. Sorry, guys. I'm just a Forex trader. I don't do commodities or anything else. What am I going to do about prop firm accounts for the rest of the year, like during your break? I just don't trade it. I don't have to. Those prop firms don't require me to trade. I just wouldn't receive a payout. Do you manage all these trades once placed yourself, or there's a team? So, I mean, I manage my own trades. I trade on my own. We don't have like a team account, if that's what you're asking, like an Ariel Fx Trading account. We each have our own personal accounts. So we just manage it themselves. I mean, we're all trading relatively the same setups anyways, since we, get on and do analysis together. But yeah. If the structure broke the 1 hour for the higher time frame POI, would you look at maybe hedging with a short position? So you just have to ask yourself, if the higher time frame is going against a lower time frame, if they're not in alignment, let's say higher time frame is bearish, but lower time frame is bullish, right? Sure, you could hedge your position. You could be selling at the higher time frame levels, but continuing to buy with the lower time frame just in case the lower time frame continues, right? But you can't just be placing a buy and a sell whenever you want. Just because structure may not be in alignment with each other doesn't mean you just immediately hedge. You can't do that, because then you're just placing a random position. You have to treat each trade independently from each other. So if there are the right confluences and your rules are met perfectly for the hedge, then you can do so. However, if it's not, then don't hedge, because that trade wouldn't have the confluences and the rules being met. But yeah, good question. I have been with the sessions from June, and I'm beginning to see the light. Thanks. Yeah, awesome. That's good. Remember, guys, this just takes a long time, right? Trading does not come easy. It does not come in like a month or two. You know, I was failing for 18 months before I came profitable. So it just goes to show you have to put in the time. You know, sometimes it takes years to learn. It's possible. It's very possible. I was just like a lot of you when you first started as well. I was a beginner. I didn't know what I was doing. And now I am where I am today just because I just never gave up. Let's see. All right, good. So I'm going to go over the rest now. Let's just get right into it. I have a lot more to cover. Again, excuse my voice. I am still quite congested. Okay. GBP AUD. So higher time frame, pound is still quite strong, right? We have that huge crash on pound, right? With that came an immediate reversal. This huge crash never sustained itself. We pretty much took care of that in a matter of days afterwards, not even. So, for instance, this was what? 1,000 pips. That was literally, you know, we took care of that in 6 days. We came right back up to its original selling point in 6 days. That just is a clear telltale sign that this was a manipulative move, and now we're going in the right direction. Now we should be longing price. So pound has hit overall like all-time lows on GU. So I'm not surprised that we're seeing this huge relief on pound. So I'm continuing to look for pound strength. So creating higher highs, higher lows, higher highs. Yes, this is a higher time frame level of demand. If we get a push all the way back down into here, I will be looking for longs, but currently we're making higher highs and higher lows. 1 hour time frame, can see that this is really where we started the uptrend again. This is just our overall pullback, and then we started the expansion again. We swept sell side liquidity and then made a move to the upside, came back down, consolidated, failed to make a lower low, and made the higher high. So that's our higher time frame level of demand. If we come back down to 1.76, that would be a good, area to be looking for longs. This would just be that overall pullback, like I talked about, acting as sell side liquidity for a continued run, just like we saw in AUD JPY. However, if we do continue with the lower time frame structure, we could easily do that and go long again. So I have, there's really nothing in here to tell me anything right now. So, there's not always going to be something. And in this case, if we understand the structure, we have a huge imbalance. I just went 50% of the imbalance, 1.788, right? So really, if you wanted to enter in here, stops would go below here, and then you just be in a higher time frame trade, right? When it goes long, great, or if it does, right? Then lower time frame, since you're already in this position, you don't have to worry about price coming into here and just, linearly moving without any confirmation. Now you don't have to worry about having FOMO and getting in up here because you're already in here. So that's something that you could take advantage of. But obviously what we'll look for is once price gets into here, we're going to be looking for, opportunities to be looking for longs, right? That's what we'll do for additional positions. That's just an overall level, higher high, higher low, higher high, higher low, imbalance in there. And we have a deeper level down in 1.76. So just continuations with structure is what we're looking for. GBP Swiss franc, very similar, right? We have our higher time frame level down in here. That huge sell-off, huge retracement, reprice continuation. Higher high, higher low. Higher high, overall pullback, higher low. We came into that sell to buy, that demand. We swept liquidity, and then we started the uptrend again to try to make another higher high. So we're still in this bullish uptrend. And I have 1.2 because, that's a clear psychological level, 1.2. And also that's, kind of aligns with, a little bit of a supply level imbalance in here, mainly looking at it because it's a psychological level. 1.2 would be that attractive price point for probably big time banks and institutions. So anyways, with that being said, we broke the counter trend in here, right? We have broken that counter trend. We made our higher high. So this could just be one expansion. Could we have an overall pullback for another expansion? Sure, we could. Or we could just continue with the lower time frame trend that we're seeing, right? That's always a possibility. So let's look at the higher time frame first. Where could we come into if we have an overall pullback? Well, I have two levels. One is where we broke structure. You can see lower low, lower high, lower low, lower high. Sort of failed to make a lower low, higher high. So that sort of demand level right there. That's a good level. Two would be lower time frame levels of demand, which we created a low, a high, a low. We reacted from that level that we talked about, this whole demand level to the left. We pushed up, we reacted off that supply. We failed to make a lower low. We made the higher high. So that will turn into demand as well. So that's if we dig deeper into that level. All right. So we have those two potential levels if we have an overall pullback. However, we can continue with the lower time frame trend that we're seeing. All right, we still have more room to go to the upside. We're targeting 1.2 higher time frame. We can see equal lows, relatively equal, or swept with these wicks. Swept the liquidity and continued higher. Higher high, higher low, higher high. This is the range right in there. So we can see the huge sell to buy, chop, 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 expansion. That will turn into demand. That's exactly where we came into. That was our first entry, which is right here. And then our secondary level was just on a lower time frame, which we can see, lower low, lower high, lower low, lower high, failed to make a lower low, higher high. So this will kind of turn into demand as well. And we came into that demand. It looks better on a lower time frame, but for the sake of time, I'm not going to scale in. And, we're currently sitting just a couple pips in drawdown. That's fine. Stops were below the overall low here, right? Not below the block, because we would have easily gotten stopped out, but below the low. Okay. So right now we're forming retail descending liquidity. 1 touch, 2 touch, almost 3 touch, 4 touch, really just 3 touches. But anyways, when retail is looking at this for shorts, we can look at this for longs, sweeping buy side liquidity. Okay. So if that is the case, and if maybe we see something like this, well, then maybe the breakout traders would actually win because, well, it's going with the order flow of the market as well. But anyways, we're in from this position. You can see the counter trend in here. If we go like this and we fail to make a lower low and we break out higher high, this would turn into that nice demand level for continuations long. So that's something that you can be looking out for this week. If we look for a break, then we can be looking for pullbacks to continue long. And we'd be in these two positions, right? So I was looking for continuations long. Same thing with GBP USD. We had multiple different levels of interest. So with GBP USD, first, very quickly, it's very similar to all the other dollar pairs. We're in an uptrend, okay? We're making higher highs, higher lows. Yes, we are higher time frame bearish, but we came into all-time lows, historic lows. We've never been lower than this price. So what do we naturally expect? Some sort of relief. I definitely think we can run higher, 100%. We go to the weekly time frame. You can see clearly we swept that low from 1985. All-time lows were taken out. So I would not be surprised to see some sort of relief on the pound, right? So right in here, we had many opportunities. I'm not going to go into these, but we had a nice 1 to 3.5, a nice 1 to 5.8, a nice 1 to 6.3. And then we're currently sitting in this one with a nice 4.5 risk to reward. And now we're looking to get back in. Actually, we're sitting in this one as well for a nice 4.3. So with this trade in here, I'm currently running this on 0.33% risk because I had one in here, 0.25% risk. I had one in here, which is the one I'm currently in profit on, one down here and one down here. And then I also had another one on a lower time frame in here. This is the one I lost on. Stops were below that low. The reason why is because we created equal lows the prior week, clear sell to buy, higher high. So I just wanted to pull back to mitigate to go long. There was a lower time frame repricing and supply right in here. It's not seen on the 1 hour. It's best seen on the 15-minute, but there's a supply. Met my rules. Everything was good. Higher high. Maybe we would have just continued with this lower time frame trend. We could have easily done that. Just like we're doing on all the other pairs, right? We're just continuing to trade with this trend here until it breaks. If it breaks like it is now, then we go to the next level. We have one here. If that breaks, we come to the higher time frame level and we just trade that. Whichever one works out, this one, or this one, or these, we're still making money from it because overall we're bullish and we're following the higher time frame trend of the market. So it's either very short-term retracement to go along to play off these lower time frame opportunities, which could have easily worked out. It just didn't this time. We could have come a little bit deeper into intermediate demand levels like we are in now. We could come deeper into the overall demand and sponsored move and go along. It just doesn't matter. This is the low that produced this high. This is the range. We could trade anywhere in this range. That's why I have multiple levels. So lost this on a 0.5% or a 0.25% risk, and now I'm in this on a 0.25% risk. Okay, so in profit there, and even right now, 1.67. Let me just make that pretty again. 1.67% I'm up on this trade. However, I'm only in a 0.25% risk there. So if I just divide that by 4, I'm up 0.4175% at this current time. Minus the one I lost, 0.25, I'm still in profit of about 0.2%, which obviously we haven't hit overall take profit. And secondly, we have to just place those we have to split up the risk in that way just in case price did come down into these levels and maybe even went lower. Because we had full risk on that and all of them, 1, 2, 3, 4, we lost 4% if price just had one clear, just push the downside. And this is not what we want, right? A dripping tap fills the bucket. That's what Aiden always says, and it's so true. Even if I make I probably will make 1% on this trade. 1% minus a 0.25%, it's 0.75%. Let's say I do that just one time a month, right? With all my other trades that I'm taking, 0.75% times 12, that's just an extra 9% per year on my trades that I have. Just dripping tap fills the bucket. It's completely fine. NZD/USD, I really don't have anything for. There's nothing lower time frame in here. The only thing that I see is just lower time frame or higher time frame levels. So clearly we're in an uptrend. It's the same thing that goes for all the other XXX/USD pairs. I'm not going to do top down. But anyways, we can see that we made a higher high, pulled back, higher low into this overall demand in here. Came into 616 psychological level. Pushed up, failed to make a lower low, higher high. Right, so pretty much this entire demand level in here is what we were looking for. So the start of the demand, 6,250, perfectly. That's our first one. Second one is just a little bit lower into a lower time frame level of demand as well, just right in here. This is where the imbalance was first initiated or started. And then, obviously last selling volume before the up move. And obviously everything in here is just to prove that, stuff is working out. Ascending liquidity, lower time frame run, higher high, pulled back, mitigated like a 1 minute block before pushing higher, reprice, continued. So just more proof and conviction for the trade. 1 touch, 2, 3, 4, 5, 6, 7, 8 touches of this trend line. If we get an overall pullback, that would be great sell side liquidity to run for us to continue with the overall trend in the market. All right. That's what I'm looking for. I don't really have anything too fancy on NZD/USD. If we get the pullbacks into these levels, great. If not, oh well. USD CAD. So we have been hedging our positions for a little while now. Now, hedging takes place when the higher timeframes and lower timeframes are not in alignment with each other. So in this case, this time frame, quote unquote, is bullish. We're making higher highs and higher lows. This time frame is bearish, lower lows, lower highs. This time frame is bullish, higher highs and higher lows. So which way are we going to go? Well, we don't want to have to be precise and pick. Let's just get in where we can, right? So we've come into a higher time frame level here. When we've had the reaction, we failed to make a higher high. We made another lower low. So I'm still looking to sell this. This is one expansion. This is one pullback. One expansion, one pullback. Until we break this high, we are still bearish. So we could potentially be coming down into 1.321, which is higher time frame demand on the daily. And then we also have these relatively equal lows. 1, 2, 3 touches, equal lows here. So we could push down, take that sell side liquidity out as well. So we had multiple levels to sell it from within this expansion for an overall pullback. There is a 15-minute time frame area of demand in here. And then we have that level of supply, or excuse me, this is supply. Sorry, not demand. 15-minute time frame supply, and then we have supply in here as well. So we had two positions. One of them was hit. The first one was hit. Great. We were in great profit. We came back down, moved stop to break even, and then obviously, price came back on the hit break even because we continued with the overall counter trend uptrend. Okay. But we understood that, and we're like, okay, lower low, lower high. This is supply. Lower low, lower high, came up into supply, failed to make a lower low, and instead made a higher high. So that supply will turn into demand, higher high, higher low, higher high. We could come back down into that demand level in here, which is exactly what we did. So we took a buy opportunity from there to hedge our shorts. So we took a buy from there. We actually hedged in here with some buys from that level. Obviously, we pushed right through, hit stop loss. And then what we also did was hedge another short opportunity from this supply level. And obviously that ran to the upside as well. These were all in half risk positions. So when we finally get in the position that makes its overall move, and now we're making the big bucks, well, all these little tiny hedge buys and sells to try to catch the right direction, those are all mitigated by the big win that will accumulate. So I'm still looking for shorts from 1.3716, stops at that level. I am looking to short that. I have my sell limit. In case we come back up, sweep this liquidity, and go short, great. We're still maintaining our bearish structure of the market. Stops are at break even right now for this one, definitely. Why? But because we made a new higher high from this previous high, right? So stops are at break even. Partials have been taken. So I wouldn't lose any money on this buy at all. But then we would win money on the sells if we kept going. But if we lose on the sells, hit stop loss, great. I'm still in this huge trade for a nice 1 to 16 risk to reward. Obviously not 1 to 16 entirely because we split up our positions because of there was multiple different levels and we were hedging. So still aggregate positions would be in profit. So I'm looking to short from that level. Also, I'm potentially looking to get back in at 1.3520 for continuations. Higher high, higher low, higher high, higher low for a higher high, just in case we continue. That would be that last demand level in there and in balance. That would be a nice level to go off of. Psychological level, 3,520 as well. All right, continuing here. USD Swiss franc, I really don't have much for, guys, at all. Dollar is still bearish. Higher time frame, we could come back down into 9281. Could even come a lot lower, but really what I'm looking for, lower low, lower high, lower low, lower high, right? I was looking for a pullback into this area of supply. Sweep all this buy side liquidity, come up into that supply zone, continue with the overall market structure. That's really it. Not too fancy. NZD Swiss franc. So again, same sort of deal to Euro USD. We had multiple different levels. Lower time frame, there were equal lows with this. See that wick right there? There was a clear sell to buy in that wick. Clear sell to buy. Created a lower time frame level of demand in there. Made a higher high, pulled back into the level, had a slight retracement, and then we broke and took my stop loss. That was just on a low risk. We had 1, we had 2, and we had 3. So what does that say? 0.33% risk a pop. Okay. I had no idea. We could have easily just went like this and just continued with the overall trend of the market. We ended up having a deeper retracement, which is why we lost that first one. And guys, I'm not just pulling this out of my butt. We have to build confluence around each and every opportunity. Equal lows, 1, 2, 3 touches were swept clearly. Repricing occurred right in here. That's that demand level. We had the reaction, but we ended up going short. And that's just, it is what it is. So we end up coming back down into our higher time frame level of demand in here. That was our secondary position right in there. And then our third position is right down in here. It's just a lower time frame level of demand as well. This is where we broke the structure. So we had the overall pullback, last sell to buy opportunity, kind of retested it, went long, unmitigated demand, stops below that low. Okay. So that's what we're looking for. We're in profit on this one. If we come back above that high, stops here will be moved to break even. But for now, we have to leave it below its low. Okay. If we come shorter, oh well, we lose that one. And then we get in on this, hoping that we'll go long because obviously we're still bullish. So probability of us going long is a lot higher than the probability of us going short. Okay. So going to let's go to the 4 hour. It's really good. I'm expecting more upside because we haven't taken out buy side liquidity. We can see this high in here. If I extend that all the way over, we just missed it by like a pip or two. So that will be buy side liquidity. It's relatively equal highs. I expect further upside and higher time frame 0.62. If I go to the daily time frame, you can see that there's, this area of supply and imbalance in there, psychological level as well. We're just in this overall pullback phase. I think we can come higher. So that's what I'm looking for. Those are my levels. We also won these two, last week or 2 weeks ago, whenever that was, the 23rd of November and then the 29th of November for a nice 1 to 3.45 and a nice 1 to 3.33. So congrats if you took those trades. I talked about those in the live sessions as well, I believe. All right, USD/JPY. This is something that Aiden talked about. This is really not my trade, but I guess I kind of agree with it. We are still overall bearish on dollar. So you can see lower low, lower high, lower low, lower high, lower low, just following lower time frame structure. If we end up pulling back higher time frame, great. Then we may short off, but I'm just following the structure as it's given. I think we can come down to 130. That could be an overall objective for us. We'll just have to see. So going down to the 1 hour time frame, we can clearly see that descending liquidity 1, 2, 3 touches of this trend line was taken. 7 in the morning, 8 in the morning EST. This is prime New York session open. Clear buy to sell, continue for the rest of the day. We're having a pullback. Well, if we can have an overall pullback back up into this and then fall, that would be great. Mitigate that supply and that sponsored move. Maintain our bearish structure, lower low, lower high, lower low. That would be nice to see. So 138.47 would be that area of interest for me. All right, just a few more. 80 CAD. I really don't have anything on. We're just in a huge linear uptrend right now. These are my higher time frame levels, but I'm not even going to talk about them because they're miles away. Objective is 936. We're buying up into that level. We had an opportunity 2 weeks ago to play off of one of two levels. Add one here and one here. You can clearly see equal lows were run, sell to buy, reprice, continue higher high. So the overall pullback for a higher low, we came into our first zone of interest, which is right in here, sweeping sell side liquidity. This is just a quick in and out for a 1 to 4.1, easy trade. And then we also had a re-entry opportunity right in here. You can see the sell to buy, the reprice, the continuation. Essentially what the repricing is think about it in terms of a counter trend. Lower low, lower high, lower low, lower high. We fail to make a lower low. We stop here and we make a higher high. So that will turn into the demand zone. Okay. This is supply. We came up into supply. We can see clearly we pushed up into it. We wicked into it. We had the reaction from the supply, but we didn't validate the supply because we never made the lower low again. Why? Well, because we came into our original level anyways. That was already expected. So made the higher high that will flip to demand. Perfect entry here again for a very nice 1 to 4.4. And we're still in this trade. About 2.5% up, I think. Something like that. Re-entry opportunities, I don't see anything. If you miss this move, oh well, move on to the next one. Don't force anything. There's nothing in here to play off of. Nothing. If we see something like this, an overall pullback, and maybe we get some sort of accumulation, equal lows, run into, I don't know, some sort of demand in here. I don't even know. We go make a higher high, then great. That might be an opportunity. for a higher high, a higher low. We break counter trend structure with liquidity concepts. We mitigate the sponsor move and we go long. Then that would be the only way I would get back into this. But obviously, I have no idea if that's going to be the case, and we'll just have to sit in our hands for now. Price is still trickling. Same sort of deal with NZD CAD. It's just trickling. There's nothing to play off of in here. I mean, look at that. It's disgusting. AUD, NZD. So higher time frame, we are extremely bearish right now. We're just in a dump. We're dumping, okay? But look at this. Let's take a look at the higher time frame, and let's just kind of see what's going on in here. So let's first start off by talking about 2015. We ran that low, right, with that wick. Clear liquidity run, and guess what we did? We broke the counter trend structure. Low, high, low, high, low, higher, high. Everything can be applied to every time frame, guys. 1 minute concepts can be applied to 1 month concepts. It's the same thing. It's fractal. So we sweep liquidity and we make a higher high. In the process of doing so, we also sweep sell side liquidity here. 1 touch, 2 touch, 3 touch. How many traders do you think are buying at this third touch of the trend line? Probably so many, which is why so many got screwed when we came lower. Price stops below the low, great, sell to buy. They trade the breakout short, so then they shorted again. They were originally buying. Stop loss was hit, then they sell it because they're breaking lower. Nope, right back to the upside. Retail loses again, and I absolutely jump for joy. So sell to buy, reprice right in here. Demand zone. This was the failure to generate the lower low. We came back up. This is really our last buying volume to sell off. We came back up, retested that. So the break and retest traders are now on board here. And again, they get screwed over. So that will turn into demand again. We made the higher high, unmitigated, a lot of imbalance in here as well. Okay, so now we wait. Higher high, overall pullback. We come into that level, mitigate that demand, and we make have a reaction. Failed to make a lower low. Look at the counter trend. Low, high, failed to make a lower low. From this low, higher high was formed. And now we start another expansion. Expansion, pullback, expansion again. All right, so now where can price come back down into? When we made the higher high way up here, where can we mitigate? Well, really in here, this is our last selling volume that failed to generate a lower low. I mean, really this is the overall move that did not make a lower low. But if you want to look into a lower time frame, low, high, failed to make a lower low, higher high. Okay, so 1.050 psychological level as well. So that's where we want to come into. That's where price is going to come into. That's just where, order flow is telling me to, to sell price down into it. Obviously, if we have sell opportunities, that's where price is going to be attracted to next. So continuing with the structure, I mean, there's not much structure. It's really just trickling and consolidation and trickling. But we did have an opportunity here this past week for a nice 1 to 3.3. We can clearly see here, lower low, lower high, lower low, lower high. This is just a liquidity run for a lower low, and now we see a lower high. What else do we see? I'm actually just even seeing this now. Swear to God, I really just am seeing this now. It's kind of funny. Retail, inverse head and shoulders. Shoulder, head, shoulder, fake out to the upside. People try to trade this breakout, and then price goes short. So that's what's most likely going to occur. If we scale into a lower time frame, we can see that it was just a liquidity run, just a little wick, took the liquidity and made the lower low. So the range is now from this high to this low here. So lower low, we expect a lower high for a lower low again. Well, let's look at where we initially kind of broke. So we made a high, we made a low, we made a high, we made a low, and this push up failed to make a higher high within this sort of counter trend up move, right? That pullback. And then we started the downtrend. So really, this is that point of supply I wanted to see be met. So I sent that out this past week, 1.0622. Came up into that, had one more push up back up, and now we're starting to fall. All right, so in this trade, very nicely, I don't really see any additional opportunities. I mean, maybe if we do something like this, if we go like that, we make a lower low again, that could turn into supply. Pull back to short, something like that. I have no idea. But right now, we're just kind of sitting on our hands in profit at the moment. All right, 2 more, AUD Swiss franc and Euro Swiss franc. So with AUD Swiss franc, we already understand that we are higher time frame bearish, right? And no, it doesn't look like it. I know we kind of are in a range at the moment, but we still have to understand the structure of the market. Lower low, lower high, lower low, lower high, lower low. This is all just one lower high for hopefully a potential lower low. This is the range from that high to this low. Let me just do that again. From that high to this low is the range. We're just kind of trading within that range now, hopefully getting that break to the downside. Okay, so it happened to be on the 2-hour time frame that we had a sell opportunity from this sponsored candle. Buy to sell, we came up into that lower time frame level of supply, had the overall retracement. This last buy to sell swept liquidity in here, and then we made the move to the downside. We sold it when we came up into that level, had a lot of other sell opportunities, but put stops to break even because we were just consolidating, forming buy side liquidity. And guess what? We ran that buy side liquidity, so we were out of all these positions. Took a couple losses because they didn't quite come down to my TP1, so I couldn't put stop to break even yet. And we never made lower lows from them because we can just see sideways movement. But anyways, it was just building up liquidity, essentially what this was. So we have buy side liquidity and sell side liquidity to run. And we have run both. So distribution was occurring once we came up into this order region. I guess you can call it that. Discrete higher highs, higher lows, and then we made the lower low. Okay. So where was the last buying volume? Essentially, it was right in here. This high was taken out with that high. This high was taken out with this high. This high was not taken out. This high never made a higher high in comparison to that high. That's why we broke the structure and made the lower low. So this is our last buying volume before that sell-off. So this is the overall supply. But we can see in here we have a lot of imbalance in there. And we had a lower time frame supply within that wick as well, which is why when we built up liquidity, we came up into that level perfectly. Okay. So 1-hour time frame, we distributed again on a lower time frame, broke lower time frame structure in here, and that's where we had, I think, like a 30-minute area of supply. Yep. So when we were down in here, I'm like, okay, higher high, higher low, higher high, lower low. We shifted structure, and that made sense because we came into that region in which I was already hoping for anyways. So within this level, we had a 30-minute level of supply. Came back up, hit that very nicely to the T, and we still are in this trade. Stops are at break even on this trade here. Partials have been taken. You can see lower low, lower high, lower low. Once that occurs, stops move to a right above that swing high, pretty much break even. Partials have been taken as well. We can also see this little retracement created this block of supply. Made the lower low, pulled back, just missed it, continued short, waited for the opportunity, got back in here, had that wick entry, and now we're floating around break even at the moment. Stops cannot be moved to break even yet because we never made a lower low. Once we go like this and we break and make a lower low, now we can move these to break even. Partials have not been taken either. So sure, if price goes long, great, we could lose that trade. We would have made money on this trade because we took partials and stops would move to break even, so we won't lose any money there. But we would lose here if price just continues long. And if that's the case, if price ends up going long, then price may just break structure to the upside. If we end up coming higher than this, we're probably just going to continue higher. I mean, Aussie is strong. However, we're still overall bearish, and we haven't come into our objective point at 0.6. Really, it's just this overall block on a higher time frame. It's demand, but 0.6 is that psych level. So I really want us to see lower prices. However, if we get a break, obviously, we won't expect that because the whole time we're in a downtrend. The probability of us shorting off is a lot higher than us going long. But if we do go long, oh, well, we have to end up losing eventually. You know, you're trading with the trend. Eventually, you're going to lose. The trend's going to break. So, you know, that is what it is. But, I mean, we're still trading within this range here. So we could easily continue short. We may just be coming higher. So we can see here, where is the range of this? This is the high that created this low. This is the low that created this high. This is the high that created this low. All of this in here is just lower time frame swing points. Okay. This is just an overall retracement that we're seeing right now. We could push higher, sure. But overall, we should make a lower low. This is a lower low. This is a lower high. This is a lower low. This could be a lower high for a lower low. So yeah, price may come higher. This does not mean we might lose this trade. This doesn't mean right when we get in and we see the reaction, we should just move stop to break even. We have to be smart. So I'm still holding my stop at where it needs to be, because price could come a little bit higher, maybe deeper into this block, maybe up into here, who knows, and then go short. Great, I'm still making money now. Okay. However, on a lower time frame, go to the 15-minute. Once we did see the reaction from the level, right? We made a high, a low, a high, a low, had the entry, we made a low, we failed to make a higher high, we made the lower low. This was a perfect setup right in here. Beautiful, beautiful, beautiful area of supply. Made the lower low. I figured we'd go like that and we'd short off to make continuations. But we ended up running it. I lost on this position here. So yeah, I lost there. But if this presented itself again anywhere else, I'd be taking this all day long. It's the concepts that work. It's the rules. I mean, it makes sense. We're in an overall downtrend. We came into a higher time frame level of interest. Great. We failed to generate a higher high within this pullback. The counter trend was broken. We have a level of supply in here. I'm taking that all day long. It just ended up not working out this time, and that's okay. I mean, it's not going to be 100% every single time. Now, if you're looking to potentially hedge yourself, then this area of demand may not be the worst thing in the world. And this is what I mean by hedging. We're in shorts here. Could we buy to hedge our shorts? Potentially. I mean, I guess you could say we're still, bullish here. If we make a higher high, I'm not going to be hedging this yet. I have to wait until at least Monday, New York session, for me to see where price is at. So if price comes down into here during Sunday, I'm not trading this. I really want to see a higher high. If we are going to hedge, I want to see a higher high from this high. So if we come higher, and then if we start pulling back, then maybe, obviously, we're still in shorts from here. We're fully expecting a lower low to occur, right? And then if we win and the shorts or the hedge longs lose, well, then we only lose a little, but then we're winning large on this huge sell-off that we'd see. However, if price decides to go long and break structure, and we're making counter trend higher highs and higher lows, and we make a higher high clearly, and we pull back, that would be a level of demand in which we could take it off from for potential longs. So if price goes long, we lose on the shorts, we win on the longs, aggregate positions would still be in profit. Now, why do I like this demand level? I'm not just hedging just to hedge. What do we see here? Well, this is supply, right? The supply we originally reacted from. News event came out, huge push, could have been just a liquidity run. Push right back up, consolidated 1, 2, 3, 4, 5, 6, 7 doji candles, expansion. If we have that expansion, that would be a perfect area of demand to buy from. So in that case, I would look to hedge my positions. So if we make a higher high from here, we haven't done that yet, and it's not Monday New York session at least. If we do, and it's at least Monday New York session, let's just say even if it's Tuesday or Wednesday, and then price makes a higher high and then pulls back, then yes, I will be hedging my shorts with my longs, and I will be in both positions because both of them have confluences and make sense for me to do so. And guys, you don't need a huge account to be hedging, okay? You go to position size calculator, to buy my FX book, and type in your risk. There is no reason why, even if you only have like a $500 account, you can still be risking, 1%. It's not that much. It's not like you're risking, 20% or to 30%, where it doesn't matter. 1%, there's always some sort of lot size to be using with any account size you guys have, right? Last one, and then we are done. Euro Swiss franc. So we are still in a position from this level down in here. I really don't see much on it at the current moment. Overall, we're bullish. I mean, if we get overall retracements back down into our levels of interest, I've talked about this so many times. I'm not going to go over it again, but then I buy from those two levels. But anyways, we're still making higher highs, higher lows, lower time frame. High, low, high, low. We mitigated demand, broke counter trend structure, reacted off of demand in here. So we're just waiting. You guys are in this, just continue to wait. Stops to me are at break even. Why? Because we made this high, we made this low, and we came up and we made a higher high from there. So if price comes lower, it hits us break even, we're probably just going to continue lower. Okay, so we're just waiting there, and I actually had another position here this week. There was a level of demand in here, swept liquidity, sell to buy, higher high, had the initial reaction, went long, but ended up falling back. So it was just a small loss there. Oh well, it just happens. So that's pretty much all I have for you guys today. I don't really see much else going on at the current time. So yeah, I'm going to stop sharing, answer some questions, and then we will be done. Let's see. GJ, I don't have anything for GJ today. It's not on my list. All right, guys. Anything you guys have for me? Any questions? Anything else? Do I use a copy trader? No. I don't know why I would. Just trade off my own account. What buttons do I have to press on TradingView for the cheat code? If you push the experience button, that would help. I know, guys, I see that question, Maurice, or Morris, or whatever. Sorry if I mispronounced your guy's name. Sometimes it's hard for me to wrap my brain around like what is exactly you're telling me. So just send me a message personally if you want to. Just send me a screenshot of a chart with an example that would help me clearly understand what you're asking. I just don't really know what you're asking here. How long have I been trading for? Let's see. Today is December. 5 years. 5 years and 2 months, something like that. A little over 5 years now. See, just to reiterate, guys, we have one more Saturday live session, which is next Saturday, and then we are done for the year. Going to take some time off. Volume is going to start to slow down anyway, so there's really no point of trading the latter half of December, just in my opinion. So we'll have two more, one on Wednesday of next week, and then one on Saturday, and that's it. Any other questions, guys? And, as always, if you're really interested in really learning to build these skills the right way, to do this full time and understand that trading takes time and is, something that you can't learn overnight. If you have that mindset and want to develop these skills and have me teach you one-on-one, feel free to head over to my website, arielfxtrading.com. Just book a free call with me. I'd love to just speak with you. Talk about your goals, talk about how we can best help you, put together a plan of action for you to see if you would qualify for our program. If that's something you're interested in, great. If you guys don't think you guys need the help, if you guys are already profitable on your own, well, then congratulations to you. Then just keep going. Learning every day and getting better. Yeah, that's the goal. No problem. Jalen, yeah, good to have you on today. I know you've been on for quite some time now. I appreciate it. Love to see some familiar faces here, guys. Any other questions? We have a couple more minutes. It's about 10 to 12 here for me. We've been on for about an hour, 50 minutes. So I appreciate you guys' time today, especially bearing with me during this sickness. I'm still trying to get over, trying to kick, but if you book a call, assuming it's a good fit, would we start this year? Yeah, you could start whenever. How we approach working with our clients is, we don't believe in subscriptions because let's think about it. Let's just take a step back. I know a lot of you guys probably have been a part of, I hate mentioning it because I don't want to bash on anyone, but iMarkets Live, right? I was a part of it 5 years ago. I'm not going to say what I want to say about them. However, when they don't teach you the right way of trading and it's really just a network marketing scheme and you have to keep paying however much it is now, when you're learning how to trade, the mindset of a trader is, if I'm paying for something consistently or on a monthly basis, I expect an ROI. It's just not how it works when you're learning to trade. You have to be able to fail for a good amount of time and be practicing for months and months and months, even years, before you can become good at it. So that's what people go wrong. That's where people go wrong, is they pay for something and then they have to pay for it again the next month to keep their subscription. And it just creates a lot of psychology within that trader to say, oh, I have to pay again, but I'm not successful yet. Well, yeah, because it takes time to learn. So of course you're not going to be successful. So they hop around from that group to another group thinking that group's going to make them successful. When in all reality, it's still experience that's required of you. And you're going to continue to fail no matter how many groups you join. That's why people will never understand, stop hopping around from group to group. Find a mentor and someone who can teach you without having subscriptions behind your back. It's just stupid. So we don't do subscriptions, just a one-off payment. We don't do upsells. I don't believe in that crap. I'm not going to come out with another course and be like, oh, you have to pay for this one. It's all just like my psychology course that we came out with on Halloween of this week, which is October. I gave that away for free for my current members. Obviously, for people who aren't a part of my program, yeah, that would cost money if that's something you're interested in. However, if you're already a part of my program, I'm not going to charge you for anything else that we create. It's just, I don't believe in that. I believe in education. I believe in sound mentorship and not any of those upsells and everything that everyone else does, because in all reality, people who are doing that kind of crap are people who don't know how to trade for themselves and rely on sales to supplement their income, which is just ridiculous. So that's another reason why I created that video on YouTube that I just came out with yesterday. It's going over every single solitary trade that I sent in the VIP Discord channel. If you haven't taken a look at that, go check it out. Just search Ariel Fx. It's one of the newest ones. I do a full audit, full transparency, wins, losses, everything, every single trade sent. And I even show proof of everything within my VIP Discord. I share my screen and show every single piece of analysis that was sent, just because people don't do that nowadays. You don't do that. You find people online who are just, picking out the trades that they've won, or just kind of finessing their trades and posting that to try to get you to join their community, it's just so immoral, to be quite honest. So I combine fundamental to technical trading. So I really don't pay too much attention to fundamentals, to be quite honest. I keep up with them to see when they're going to be released, like when monetary policy is going to be released, or, the Fed funds rates or CPI news, stuff like that, just so I can figure out, are there areas of interest that I'm looking for, or liquidity that could be run as a result of the news event being released. So when news events are released, we know they're just excuses to inject volatility, right? So I look for, are my areas of interest coming into fruition? Meaning, I'll just even give you an example. I'll share my screen here. So for instance, let's just say that, let's just say right in here. And this is a perfect example, a news event. Perfect. PPI news event on Thursday, right? Or Friday, 8:30 in the morning Eastern time. You see that on the bottom of the screen? It says Friday, December 9th, 2022, 8:30 a.m. Eastern time. It's exactly what happened. 8:30 a.m., Friday, December 9th, USD core PPI news. I'm sorry, guys, but if you think that news is random, you're very mistaken. News is pre-planned. They know exactly what to do. It's just an excuse to inject volatility to go in the right direction. Obviously, the selling is not in the right direction. That's okay. It's just used to sweep liquidity first, mitigate a demand, and then continue in the right direction. So I look at my Forex factory to kind of see, okay, well, what could be coming up? GDP for GBP, what could create the volatility? We have CPI news on Tuesday, 8:30 in the morning this week. So then I would go to the chart and be like, let's just say that, it's Tuesday at 8 o'clock and price is trading in here. Oh, well, we probably, with the news, will sweep these equal lows, come into my level, and then go long. And that's exactly what happened for last Friday's news, right? So I would just look at the charts to see, okay, what could news do to push and mitigate price or sweep liquidity of some kind or whatnot. That's really the only thing I use news for. Otherwise, it's already pre-planned, and it's just going to go with the overall price action and technicals of the market anyways. Any advice for some taking prop firm evaluation during December? I really wouldn't recommend trying a challenge in December, just because the volume is really low in December, especially in the latter half. I would start back up in January, Price can be quite erratic during the end of the year anyway, since it is the last month of the year. So, and at the same time, guys, I'm real with you all. I'm not going to sugarcoat crap. And you have to ask yourself this question. Are you already profitable? And I'm not just talking about you, the person who asked the question. I'm talking about everyone. Anyone who's looking to take a prop from challenge, ask yourself, have I been profitable for at least 3 to 6 months? If the answer is no, why take a challenge? You're just going to probably end up failing anyways, right? Let's just be real. If you're not already profitable, you're not going to be profitable then, right? You have to pass first phase, second phase, and be profitable your third month to get a payout. That's 3 months. That's a whole quarter. The statistics show that people who are profitable for 3 months, the statistics are not in your favor. However, if you are profitable, then yeah, go for it. I mean, it's all up to you. I'm not telling you to not do it or do it. I'm just trying to shed light on, the proper way of going about, doing things, just delay the gratification, get the education first, practice. And then later on, you have a higher probable chance to succeed and you're more confident. People who try to take challenges right off the bat to try to make money, they're going at it the wrong way. You shouldn't go at it to try to make money. You have to first understand the concepts and be able to apply them to the charts consistently before attempting a challenge. Those people just want to make $1 million overnight, and it's just not the right way to go about it. That's why prop firms make millions and millions of dollars a year. It's because 95 to 99% of people fail them because they're not doing them the right way. Are the calls on Zoom? Yes, they will be. They would just be through Zoom. And it's only like 15, 20 minutes. It's really not that intimidating, guys. I'm just trying to ask you guys a couple questions, try to get to know you a little bit. If it's the right fit, then great. If not, then, you get my trading plan for free. I'll send you out with some advice on what you can do next and go from there. Do you listen to real-time market commentary while trading? No, I don't. I'm very focused, very quiet in my office while I'm working. I'm just very focused on what the charts are showing me. Bitcoin, I don't look at Bitcoin. Screw Bitcoin. I hate Bitcoin. I don't ever trade Bitcoin. Only way I would get into cryptos is if I'm buying and holding. I do not look to trade cryptos. It's too much speculation, too much erratic price movements. I mean, everything follows smart money, but it's not perfectly like clear. I mean, even Bitcoin follows smart money, but it's not like clear in the setups that form. So, I mean, I have a portfolio of cryptos that I just buy and hold for the long term, but I'm not actively trading them. $3 months for a payout, you're at the wrong. No, when I mean by like a challenge, like 3 months, like your first month is you're doing the first phase of the challenge. Your second month is doing the second phase. Your third month is you have to be profitable for that first month of your live account to even get a payout to begin with. So 1, 2, and 3, that's 3 months. That's what I mean. Buying and holding is wasting your money. How did Warren Buffett get rich then? Buying and holding is perfectly fine. Dollar cost averaging is perfectly fine. That's why so many people, even in their 30s and 40s and 50s, are living paycheck to paycheck because they're trying to time the market. Stop trying to time the market. Just dollar cost average your way in. Like I dollar cost average indexes all the time because you can't pick when it's going to go up and down. I'm not sure why you're saying buying and holding is a scam. Quite frankly, don't have the education then, sir. I'm buying and holding, and I am very well off on my own. Thank you very much. So, all right, guys, any other last minute questions? I'll stay on for like 2 more minutes if you guys have anything else. If not, have a great weekend. We'll talk to you all on Wednesday for our morning live session, New York session, 8 a.m. Eastern time. I'll drop the link in my Discord channel beforehand so you guys can understand and get part of that before. You guys can see that. Let's see. All right, no more last minute questions. All right, guys, have a great rest of your day, and we'll talk to you all this week. Take care.